What's going on, Penny Boys and Gals? What's going on? And welcome to our Penny Boys University Live. This is our first Thursday, 2 p.m. Eastern stream. We'll be doing this weekly, and I am joined by Pookie's Revenge, who will be here with us every single Thursday, 2 p.m. We'll be talking about the topics of the week as far as the Penny Boys University theme goes. You can check that out under the syllabus in both the free and the premium channels for education. But what's going on, Pookie?
Hey, not much, man. It's been a busy day, and I'm actually surprised because one of the development things I've been working on all morning just finished about 8 minutes ago. So
That's good.
So
right?
that's close call.
Oh, gotcha. Well, at least it's finished, right?
Oh yeah,
We got you here.
Oh, yeah.
So for those of you who are just joining us, maybe haven't been in the previous PBU lives on Monday and on Wednesday, we do have a theme of the week. The theme of the week right now is charting, but more specifically candles and candle patterns. And so Wednesday, we kind of have some fun, go over some giveaways. We do just kind of basics of what our PBU course is about, go over some of the material. This is our premium Penny Boys University material. We have, for this week, we have 4 different classes. We have our first one is going over candle pattern, just one candle pattern. So basically just one candles like doji and hammer and all that good stuff. Then we have 2 candle patterns and then patterns with 3 candles. And then, of course, our bonus candle patterns. And there's around I think over 40 candles in that entire series. So definitely be sure to check that out because all of you are premium members and it is free with your premium subscription. But let's talk about, I see your trading view going on back there. Let's talk about let's talk about candle patterns, because I want to pick your brain, A, but also B, any of the members. I know some of y'all who are either taking the course or joined us yesterday during our PBU lives where we went over some of this material. You might have some questions. Pookie is the one, he's the best when it comes to answering questions because he basically knows everything when it comes to trading.
No pressure. It's fine.
No pressure. So there's no question he cannot answer when it comes to trading. So please put your questions in the lounge area, the lounge NSFW 18 plus chat. That's what we'll be looking at. So Pookie, let's just first go. I know that a lot of traders are different when it comes to different candle patterns, which ones they use, which ones they don't use. I know there's like a bunch of them out there, and obviously not everyone's going to memorize every single pattern. I know you probably can because you have that type of brain, but not everyone can do that. What are some of the ones that you use? Why do you use them, and why don't you use some of the ones that people like? Maybe there's some popular ones that you don't use. I'm curious why you don't use them.
Well, so that right there just kind of addressed one of the fundamental flawed approaches to trading patterns. And trading patterns are not guarantees. They're not like this is going to work every single time or it's going to have this specific win rate and blah blah blah. It's a visualization of the price action that tells a story. So a inverted head and shoulders, for example, shows a downtrend reverting into an uptrend because it transitions from the lower lows, lower highs to higher highs, higher lows, as well as a level being broken to the upside. So it's not so much that any strategy or any setup is better than any other. It's how consistently we can do them and how well we understand what's happening within them. So, like right here on SPY, for example, we have a big inverted head and shoulders forming, right? So we know that if we get over this level, we're likely to see some pretty strong upside based on the head and shoulders kind of the concept, right? And again, that's not a guarantee that it's going to shoot up to 500 today and blah, blah, blah. But it just shows that a lot of traders are waiting for it to get over this, and more specifically, algos are waiting for it to break over this previous high right here and continue this trend of higher high, higher low into that reversal to the upside. So I personally like double bottoms. I like triple bottoms. I like inverted head and shoulders. I like flags. I like wedges. There's all kinds of ones you can learn. But if we want to look at one specifically, like a double bottom, I'm just going to switch over to Weeble for this so I can draw a little bit easier. And I'm just going to go way up here. So if I'm looking at a double bottom, I want to see 3 things. I want to see, obviously, the legs, the actual price action. Okay, that's what a typical double bottom looks like. This right here is the neckline that we look to have broken to the upside. And I'm just going to crash through this really quick. And, of course, we have the level of support down here. So we'll just do that. Oops. So this is how most people prefer to trade a double bottom. Ideally, this section would be a little bit higher. But we can break this down and we can look at specific things, right? We have an impulse here. Every impulse has the 90% probability of having a 25% pullback. So that kind of bounces off that support if it holds. And just watching this evolve in real time also tells us that it could just as easily plow right through that support level, and there's no double bottom set up there to be had because it's immediately invalidated. So when we talk about a pattern, we're talking about something that has had several conditions met in a row. So for a double bottom, we have to have that bounce off of support. We have to have a retest of that support, and we have to have another push off of that support. So it's really just about this support level right here. Now, a textbook ideal double bottom would have a wide segmented midsection between those bounces so that there's plenty of opportunity to resolve price. And it has all the volume down here at the support and none up here until it's that last final leg. So these boxes are where we want the volume to be on these double bottoms. So if any of these conditions aren't met, we don't necessarily need to trade it. Maybe we don't have enough confidence in it. And, whether it goes up or whether this turns into a continuation, it turns into a channel and then potentially breaks to the downside, that invalidates it as a double bottom because there's no confirmation. So in order to have a double bottom specifically, you need 1, 2, 3, 4, 5, 6, 7, 8 things to happen in a row. So anything other than that is not a double bottom within this context. So if you're a double bottom trader, you're going to want to look for all those and trade those consistently. Now, the advantage here is that you have a specific entry, you have defined risk, and you have greater than 1-to-1 risk reward. And that's kind of all we really need to ask for any strategy or setup. Oops. Now, when it comes to things like an inverted head and shoulders, that's a different story, right? Because then you're trading a trend. You're changing a trend in trend. And I'm not going to go through all that, but oh, that's not what I want. For an inverted head and shoulders, you want something like this, roughly, right? Obviously, it's a little, I ran out of room there. It's a little janky, but you got the same concept, right? You got a level here that needs to break. You've got a level of support here, a secondary level of support here, and you're looking for lower low, lower high, lower low. And then this counts as a wild card since it's an equal high, so equal or higher, followed by a higher low. So you have a downtrend here on this side, and you have an uptrend here on this side. So this confirmation here is when you're breaking over the high of this newly formed uptrend. So that's all an inverted head and shoulder really is. So it's one of my favorites personally because it begins an uptrend based on having this followed by this higher low and then a push up from there. You can obviously flip it upside down for a regular head and shoulders if you're looking for a bearish entry. But it's all about just what this is telling you and how you can visualize it and whether or not it makes sense with the overall trend. So yeah, that's kind of my crash course for those two patterns.
Nice. Speaking of the head and shoulders, the Porterhouse is a great question in chat, talking about QQQ on the 5-minute chart, if you don't mind pulling that up. Yeah. He's looking at the head and shoulders, even though it is on an uptrend, 3 green jaws right now.
Mm-hmm.
What do you think about that? He says he usually draws a neckline at levels, but I've seen charts where the neckline is on a trend line. In this situation, if you see the head and shoulders at play, what would you draw here?
Well, I already did.
Oh, you did already. Yeah, there it is.
I wasn't necessarily looking for a head and shoulders. Assuming that you're looking for a inverted head and shoulders, I assume you're just looking at this block right here, right? And this is a little bit janky because this armpit here, I call them armpits. Oh, yes, I am. Sorry. Good catch. Yeah, this is a little bit cleaner, right? So you've got kind of this zone here. And then you've got your, let me just draw that out here for everyone. So you've kind of got this situation as the inverted head and shoulders. Now, in this case, we need to break over this kind of high, right? We need to push over this. And if we look to the left here, we've got a very volatile area here. You can see, oops, it likes doing that. So you've got big, strong candles coming in, big, strong candles coming out, and a tiny candle here with a lot of wicks. So this level is highly contentious. So I'm going to look at a higher time frame to see what's going on there. You can see we also have a gap over here. So it's a little bit scary in this kind of range. I do like the fact that you've got this impulse, retrace, and then continuation. But if we're looking for an inverted head and shoulders, I mean, usually we want to see these after a downtrend, and we've got we got a strong impulse going into this. So this may very well work, but it is a risk factor we should be aware of. So typically when you see an inverted head and shoulders, you want the pressure to be coming from the top, ideally as a sustained downtrend, and then you want to see that trend reverse and go back up to the upside. So this is more of a retrace structural trade, in my opinion. Because if you look at this right here, you've got a nice little retrace down here with a push, so we can categorize this distance here, this pullback, and that'll kind of tell us what type of continuation we should expect. And then it's our job, obviously, to manage risk within that. But yeah, I mean, I could see this easily pushing up. We just need to be aware of these levels. So as long as you're mindful of that, and you have a greater than 1-to-1 risk reward, which in this case, it might be a little tough. So let's go ahead and draw that out. So let's say you grabbed it on a break over this high. Your stop loss is down here. So you're risking 88 cents in exchange for, let's just put that up to a 1. Right? So in order for that to hit a 1-to-1 ratio, it's got to clear the high a day. So possible, but we have to be aware of that risk.
And yeah, speaking of the neckline, I see Porterhouse is talking about how the necklines usually at levels, but they see it on trend lines. The neckline for the head and shoulders and the inverse one, it does not have to be horizontal. It can be.
Yeah.
We actually had that right there on my screen. If you look, this is actually from week 3's course on head and shoulders and inverse head and shoulders. The neckline does not have to be horizontal. So that's a really good question, Porterhouse.
Let's put that on the recording as well.
Yeah, so there you go. For those of you who, this will be in week 3. I know right now we're on week 2's material, but week 2 and 3 is all charting and all really has to do with each other. But yeah, definitely be sure to check that out when it comes out. But you are right, Porterhouse. It does not have to be horizontal.
Yep, absolutely. And this is a really good example of that, because you got the armpits. The shoulders are relatively level, right? It's the same level here. That's great. But yeah, you can have some janky armpits. That's fine.
All right. So as far as I know, like, the head and shoulders, cup and handle, all those kind of stuff, those are very, very popular patterns. As far as like the less popular ones, which are the ones that, and I'll just go on the 3 candle pattern course, for instance.
Do you want to see a cup and handle real quick?
Yeah, let's do cup and handle first. Yeah.
Okay. So
I'll throw that up the screen as well. There we go.
Okay. So there you go. There's your cup and handle, bud.
It is.
It's the same exact setup as the right several points of an inverted head and shoulders, and it represents the same exact thing. It's an impulse to the downside, full retracement, and then a shallower retracement off of that, ideally within the top half of the second impulse, and then a push to the upside. So basically, this also includes a triple top. So 1, 2, 3, and on the break of that, you're breaking a triple top and cup and handle. That's why people take entry right there, because the risk is right down here. Same exact spot as that inverted head and shoulders was. So if you're looking to conceptualize things, you just take a head and shoulders, an inverted head and shoulders, and you break the guy's arm off, and then you've got yourself a cup and handle.
And I'll throw an example of the cup and handle on the screen as well from our course. And of course, with the cup and handle, you would preferably you get that nice little cup as opposed to like a V. But either way, it definitely does work.
Yeah, and that's the same thing. You can measure the volume here. For a cup and handle, you want the volume to be at the top, not the bottom. So if you're looking at a cup and handle, you typically want it to look like this, and then a smaller handle, and then a break. Go parabolic, right?
Yeah. And on the course material, says I know a lot of people are confused, like, oh, how big is the handle? Typically, they say, you want it to be ideally a third of the height of the cup, so it can retrace around a third of the cup's rise. Do you typically is that the same as far as you usually trade?
Yeah, it's just so if you break all this down, right, this whole bull part doesn't even really matter unless you're looking at it within the grand scheme of things, the overall trend. If you were to just look at this part right here, just this impulse and this retracement, it's just a retracement play. So there's a hierarchy here, right? You got the overall trend, then you've got a setup within that trend, and then you've got a confirmation within that setup. So in this case, if you just look at what's in this box here, you see an impulse, a shallower retrace, so it's within the top half to a third of the impulse to the upside, and then a reattempt to break that previous high and a push beyond that, and you've got yourself a fib continuation play. So it's all the same stuff. That's why I don't bother to learn all the different patterns and stuff. They all tell you the same exact things. You're just looking at different pieces of it. So if I were to draw it, right? I like drawing. Let me erase this piece up here so it's out of the way. Yeah, so if we draw this out, right? This is an inverted head and shoulder, okay? If we just look at this, it becomes a cup and handle. And if we just look at this, it becomes an impulse fib retracement. So there's a hierarchy here. And if we look at this whole thing, we've got downtrend going into uptrend, which is just a trend reversal. So it's there's definitely an order to things. So it just depends on how closely you're looking at it. So congrats, you just learned all 4 of those.
And for those of you who already took the premium course, we already knew all 4 of those, which is great.
Yeah.
But yeah, the week 3 is when all that comes out. I want to talk to you, Pookie, about some candle patterns. Not typically the popular ones like Head and Shoulders and triple bottom, double bottom. I'm talking more like bullish abandoned baby, the doji star pattern, all these kind of ones. Are there any of those types that you use when it's like talking about the actual patterns, like 1 or 2 or 3 candles?
Oh, I've been slamming those engulfings down everyone's throat lately. so if we look here at SPY on the 5-minute, the reason I've been focusing so hard on the engulfing candles is because if you look at the risk for these, right? If I look at this for a bearish trade with a 2-to-1 risk reward, and I'm just using SPY 5-minute here as an example because it's nice and clean. If I'm a bearish trader and I'm looking for a break below this body here by this candle, it pushes down that right there. As soon as it pushes below there, I have defined risk right above the higher high of either of these 2 candles. And that gives me a very small defined risk. And this indicator only shows ones that are less than 20 cents on SPY. And you've got greater than 1-to-1 risk reward. But no matter how big the profits are, the stop losses stay the same size. And that's the important part. It's not about how big you can make your profits. Yes, you'll learn how to make them breathe and all that good stuff, but it's just about how small and consistent you can make those losses when they do happen, because they will. And that's why I think that a lot of people have really been flocking to these engulfing trades, because if we look back, this one right here, for example, it's got a decent size risk, but I know for a fact it's less than 20 cents because it's here, right? It's here. That's showing up on this indicator, and I can look at the numbers and make sure it's less than 20 cents. I know for a fact that my max price range exposure for a loss using this specific pattern on this specific chart with that specific limit is always going to be 20 cents or less. So I don't have to care about anything else. It's either going to be a win and it's going to be greater than 20 cents worth of price range, or it's going to be exactly that at a maximum. Now, the profit in this case got much bigger, obviously. We got a higher high, higher low, aka inverted head and shoulder, right? Aka trend reversal. So just off that one entry, identifying the confirmation within the setup, within the trend, helps pick those directions and fine tunes those entries. But it just really, really minimizes those losses when they do happen. So now if I look back maybe yesterday, for example, let's see, like this guy right here. Obviously the lines aren't going to draw because, well, I guess I could do this. On TradingView, it only shows like the rightmost ones. So let's go ahead and draw that out. Okay. Well, that's a fail because both those hit. Let's bump up the risk reward to 3. Right? Let's say we want to rake in 3 times the profit for every trade that we take that's successful. All right. So in this case, if we're looking at this entry right here, right? I know for a fact this price range exposure is less than 20 cents, less than or equal to. In this case, it didn't hit that 1 to 3 risk reward. So it would have been a stop out or a partial profit lock, depending on how I traded it. Obviously, it's in the lines here, right? So in this case, all I can do is just enter with a minimal risk, set a target that makes sense, and there's nothing in the way, and then wait for the next trade if this one fails, right? So in this case, this one failed. However, we got a bearish entry with the same exact criteria, less than 20 cents risk, and it went very, very far, and that was a net profitable trade before ultimately coming back up to that same level and kind of hanging out in the range. And then we got some more entries right here. That's a target, right? Hit target, you lock 75% of the profit, you move on, right? And then that takes those small losses that do happen and it makes them so insignificant that it really doesn't mean much, right? In the grand scheme of things. So that's why I like the engulfing, but I also like the Marabozu, which is just those big fat bald candles off the 20 MA, because another one of those strategies that people really, really seem to like is the BAC, or big ass candle strategy. So let me go back to SPY. I'm just going to erase all these drawings here. I already know where the bracket is, so I don't care. I'm going to turn the 20 period moving average on. And you can see right here, we've got one. It's 21 cents, but it's abnormal for this this range. So this might have been one. Maybe you didn't. Maybe you're just pure about it and you only want to take those 30-cent candles. So let's see if we got any of those. And obviously the criteria here, like this doesn't count because it bisects the midline. This one doesn't count because it's above the moving average and it's a red candle, so we can filter those out. What about this guy here? 48 cents. Perfect. So this one would have been a BAC entry. It's a little bit far away from the moving average, but whatever. It doesn't matter. It's got some wicks on it, so it's not a Marabozu. But this tells me that I have a minimum risk of 30 cents if I'm taking the purest approach to those BACs. And the risk reward, therefore, then needs to be greater than 30 cents. So I automatically set myself up knowing that I have a greater than 1-to-1 risk reward. I have a defined risk of at least 30 cents. And then I can always cut that shorter if I want to. And it just shows a specific thing, right? It shows that the price is strong in that direction. And if it's above the moving average and the moving average has a positive slope and we're seeing higher highs and higher lows and all that good stuff, the price should continue in that direction. So that whole bar should act as a support, and you might see a little retracement here and then continuation to the upside. You might just see it fall off and retest the moving average. In this case, that's what it did. So it would have just been a small stop out and you move on. Let me just see if we get any other ones. I don't think any of these are really 30 cents or more.
Really quick, I see Cajun in the chat. I see Takax.
Oh, hey, what's up?
Just so you know, I don't know if y'all tuned in. We had some giveaways yesterday. Cajun, you won a free membership, actually, a 30-day membership to Penny Boys University, Penny Boys. Premium to Kaki One Rest and Retire, and Stickman, you got a free membership as well. We had a whole bunch of other ones as well. I don't see anyone else in the chat. I just want to make sure that y'all were aware.
Beautiful. Congrats. Yeah, so here's so I went back to yesterday. I'm just trying to see if there's any 30 cent or greater candles that that fit on SPY. And this one not this one right here kind of bisects a little bit, but the MA has a positive slope and all that good stuff. It's at a level of support, so we can use that, right? So in this case, the entry would have been at the close of this candle, open of the next. Stop loss would have been right here below this candle. And then, of course, you want a 1.5 to 1 or higher risk reward. And in this case, it just went. Like, it just blasted. Do we know that's going to happen? Absolutely not. But can we let it breathe, lock profits on impulses after the green candles are consumed, and move our stop losses up every time we get a higher low? Absolutely. And then it looks like we know where it's going to go, and we can stay in those trades as appropriate until it stops breathing. So right here would have been your cutoff level for that. So you would have locked all your profits right there. So let's measure that out and see what that is. That is a 1 to 3. So you would have got 3 times the profit for 1 times the risk in that case. So beautiful. Now, of course, you got to introduce the premium volatility and all that good stuff for options, but I don't want anyone just trading SPY. It's not good for you. So yeah, I like Marubozus and engulfing candles. That's what I like.
Nice. So I have a question for you. When it comes to these candles, it's one thing seeing them after the fact. How do you personally, when it comes to live trading, like are you just going on the daily chart and looking at the pattern, like these kind of candle patterns, when it comes to like swing trades and slower term plays, or like do you use them as day trading as well? And if so, how do you identify them? Are you using a screen or is this practice? I'm just curious. I know a lot of people probably wondering, like, it's like there's all these candle patterns. How the heck am I supposed to like actually use them in real life in a real scenario?
So that's a good question. That's where the hierarchy comes in, right? You need to identify the overall value of that area. And we do that by identifying things like key levels, trends, supports and resistances that are maybe dynamic, like a moving average or a dynamic diagonal trend line. Once price is in an area of value, then all you're really doing is waiting for it to make a decision. It's going to go up, it's going to go down, or it's going to go sideways. So in that moment, it doesn't really matter which specific candle type you use, as long as it makes sense, right? I know for a fact engulfing means there's a change in price bias, right? It means that if I see a bullish engulfing candle, it means that the bulls have wiped out short term the impact that the bears have had. So it's a change. It's an opportunity for an overall reversal. Now, am I going to do that for every single engulfing candle I see? No, because that's foolish. But am I going to do it where it makes sense and where there's value and high potential and minimal risk? Absolutely. I'll do that all day. So it's ultimately just pick one that makes sense to you. If you just like hammer candles and you just want to trade hammer candles, you're going to look at those for support levels, right? Because they show a rejection from the downside and potential reversal. Vice versa to the upside for inverted hammers like this guy. If you're just trading those, you could look in that area there and see if there's resistance in which case there was, and you saw a big inverted hammer candle. You also got an engulfing, obviously, so you can just trade those if that's all you care about. Now, if you see an inverted hammer in the middle of a trend, which you may or may not know at that time, whether it's the middle of the trend, but you can identify whether or not it's between levels or if it makes sense for price to reverse there. And if it doesn't make sense, you don't have to trade it. And that right there will save you so much time and heartache.
And that's exactly why. I think it was one of our members. Originally, we were going to do the charting stuff, like, technical indicators and zones and all that stuff first, and then candle patterns. But it actually makes more sense. Like one of them, Alex, a bunch of the members said so, and I'm glad that we did it this way. But having the patterns first, and then being able to learn supply and demand, support and resistance, trend lines, and all the different ways that you can confirm these different patterns. Kind of like making a sandwich. Like it's like all these different. You don't want just the bread. The candle pattern is just the bread. You want to have all the accoutrements as well, and that's all. Like a good bounce of a support level, or and all these other ways that we know how to see if a possible price move up or down makes sense. Is all those and being able to know that. By having this education, knowing what how supply and demand works and how support and resistance and all these things work, you can kind of put them all together to make that sandwich. And honestly, and like we always say, you never want to take a trade that doesn't make sense for you. Let's say you're allergic to pickles. Think of like those big no's, like, oh yeah, this trade has XYZ setup. Think of it as the pickles. You're allergic to it. Doesn't matter how good the sandwich looks. I'm allergic to it. I'm not going to take it. I'm not. You're
going to go, hypovolemic.
Exactly. That's the way I see it. I'm making a sandwich, and all the red flags I'm allergic to. So it doesn't matter how good the sandwich is. I'm not going to eat it.
No, exactly. If something doesn't make sense or you can't be confident in it, why would you put your money there? And I want everyone to scrutinize the alerts. If an alert doesn't make sense to you, ask questions. If you don't see something that the analyst sees, ask. We'll help you.
Yeah, I've been to really, really nice restaurants, and you get a steak, and you expect to be cooked well. It's not, and it's fine. Like it happens. And it's it's worth bringing. I'm not going to make you eat the steak, like the raw steak. We're going to say something about it so we can do better next time. And that's exactly the same deal with the alerts. Like you have to definitely be sure to let us know so we can do better next time.
For sure, and I feel like you're hungry, but so if we look at the one I put out yesterday, AGEN, for example, I want you guys to identify the overall trend, the setup, what I'm looking at. I want you to identify red flags. I want you to look into the company and say, hey, this sucks. Why are you alerting this? So I can answer those questions. I want you guys to identify risk factors and not just reasons to jump into stuff, because that's dangerous, right? So if we look at this one, for example, you can see I'm on the weekly chart, and I start very high on these for swings. You can see this is a very strong level of support. It's hit here, 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 here. And then if I look down to the daily chart, obviously those levels are still very well respected. But if I zoom in a little bit, you can see here, I've got a high here, I've got a low here, I've got a higher high here, and I've got a higher low here. And then I have an engulf right here. Okay, so I took an entry a little bit high because I wasn't watching it necessarily. But the ideal entry on this would have been right here. Right, as soon as this low validates as a higher low, we look for continuation. My confirmation for the setup and trend and all that good stuff is this engulf right here. So using that hierarchy of saying, okay, I've identified an area with a lot of potential value. Okay, otherwise I don't care. There's no point in even looking for a setup or an entry if it doesn't make sense. So finding that level of potential value is critical. And it doesn't have to be like super complex. You just zoom out and say, oh, how many times has the price bounced here? Right? What kind of reactions does it give off this level? Then I zoomed in and I identified the overall trend. We have a huge bearish impulse right here over time to this level, and then a bounce, a double bottom, right? Wink, wink, nudge, nudge. And then a huge push off of that to complete that double bottom right up to this resistance. And then we got a higher low. So higher, high, higher, low, and then a push to the upside. So in theory, taking a confirmation of this trend reversal that makes sense, and we show strength, and now we're above the moving average and all that good stuff, this should be a successful trade. So I took an entry. I put an alert out, and I was like, okay, cool, I'll trade this. If it fails, I can't control that. I can only control my risk, and I've done that by minimizing it. Yeah. Doug drinking Red Bull. I'm drinking Red Bull. I have a monster. But does that make sense? Like I've narrowed it down to a good solid entry with minimal risk, and in theory, it should keep going. So why would I not trade that? And instead, why would I jump into something that's kind of in the middle of a channel and hasn't really picked a direction, and it's maybe just choppy and messy, and I can't read it? I can articulate every single aspect of this trade and justify it. So I feel good about this one. I feel confident. If it stops out, that's beyond my control, right? So with that said, if we look at things like the volume, the behavioral metrics, how is this going to behave when it does get volume? How much volume does it need to respond? We can see it's pretty heavily diluted, right? It doesn't have a lot of restricted shares, which is good, but it's still relatively diluted, which means we need volume. And another pro is that the earnings are out of the way till November, so we don't have to worry about that getting in the way. So you just put in the time and make yourself a system, a trading plan, and then just follow that 1,000 times in a row. And see if your confidence increases. That's what I just put in options chat earlier today. I promise I'll stop rambling here in a second. I said the goal isn't to have 15 profitable trades in a row. It's to have 15 successful trades in a row. So if you can trade consistently and successfully with clear criteria and confidence, you'll be a much better trader.
A lot of it's just repetition, honestly. Like just I watch a lot of content creators and all that like content, and a lot of them are saying like just make Mr. B says make 100 videos, and same deal, just make 100 trades. Ideally, paper trading if you're gonna be jumping right into it, but like a lot of it just takes practice to get confidence.
Yeah, if you can do it 15 times in a row, it's probably the result of you taking about 1,000 trades to get to the point where you could do it 15 times in a row. So once you hit that point, then you say, okay, now I have a disciplined skill set and I can do this. And then your confidence skyrockets, not arrogance. And you have focus then on managing risk, not necessarily chasing profits. And that's what makes you a successful trader.
No, 100%. So I'm curious. I got a question for you. Let's go to the Uber chart. Let's go to the 1 minute chart.
Okay.
I'm just curious, just judging. Let's just take everything off. Pretend you don't know anything about any indicator, any support resistance, anything at all. All you know is there's a bunch of red and green rectangles on the screen. You understand how that works because you were a 1700s rice trader. You understand how candle patterns. That's all you know. Yep. What do you see right now on Uber's screen right now, or on Uber's chart?
I see chop. I see not enough data, so I wouldn't be looking at the 1 minute chart.
All right, so what chart? Let's go to the 5 minute chart then.
Okay, let's look at the 5 minute. I see my friend the engulf. So in this case, I see that price has shot up and we're looking at a correction right now. So we're looking at a pullback or retrace.
Retrace, gotcha. Sorry, I was just typing in the chat.
Yeah.
I was just going, the lesson was to zoom out, and we did that on purpose. Just kidding.
Yeah.
Sorry, say it one more time. What do you see on there on the 5 minute?
I see that the price is pushed up with some strength, and we're looking at a correction right now, or a retrace.
And as far as if someone was looking to, if either A, get into trade, B, just decide that it's not worth it, like what would your analysis be just based on the candles?
Well, so locally we have higher highs, higher lows, right here. We're forming a higher low right now. So one thing's going to happen or it's not, right? So this is the current low that's validated. So let's look at that. This next low that validates is going to form above this line or below it. If it's above this line, it's a higher low, which is preceded by a higher high, which means we'll get continuation, or we should get continuation. If it falls below this, the uptrend is invalidated and we're looking at a deeper retrace. So there's no bullish trade to be had there until it comes down here and deals with that level.
So that would be your pickles then, right?
Love pickles.
To drop down below there.
Yeah, but it's Uber and we can trade options either direction. So.
That's what I do. Yeah, I usually typically will not. I don't have enough money to be buying shares of Uber and making tons of money off of small moves.
Right.
But so options is a whole different story.
This is indecision zone right here. This range right here. So we either catch a bounce here and get that shallow retrace, that continuation. Since it touched the 50 to 61.8, so we could see a direction off of there, or we go deep and we get locked in this little channel here and then potentially fall down or shoot back up. It doesn't matter, right? We don't need to predict. We just need to have a plan for each one and look within each plan for a specific confirmation, specific entry with very, very small risk.
Be a lot easier if you could just predict a Pookie.
Well, here, let's take a long position. No,
let me throw just so you know, for those of you who are, you spices just saw that the Fibonacci on the screen for a second there. We have next week, we have a whole bunch of classes for PBU Live. It's going to be on our first set of classes will be next week, will be Tuesday instead of Monday because of Labor Day. Want everyone to be able to enjoy their weekend, a long weekend. But yeah, Tuesday, we're going to be having supply and demand zone support and resistance. We'll be talking about with Bull and Nikki and Big Daddy, NHM. But Thursday, talking about Fibonacci, Pookie and I, same time, same day, 2 p.m. Thursday. We'll be talking about Fibonacci retracements versus extensions, how they use, what the differences are, how to draw them out. We talk about Fibonacci 101 next Wednesday as well, and then I'll be and then next, I guess 5 p.m. we're talking about support and resistance with Jay. But I'm looking forward to picking your brain on Fibonacci next week.
Yeah,
but
you want to know something cool?
Yeah.
So if you learned those 4 things earlier, you can already do Fibonacci retracements. So if you like inverted head and shoulders, cupped and handles, higher highs, higher lows, you can absolutely do Fibonacci retracement plays. It's pretty cool.
Believe you.
Just pick a candle pattern within it for your confirmation, and you're good to go.
There you go. Oh, you show a drawing. Yeah, that makes sense. But obviously, knowing about how they work is definitely beneficial as well.
You need the why, not the what.
Right. I want to know something. I want to see some questions from the chat. Does anyone have any questions for Pookie about just charting in general, candle patterns, anything at all? We would love to. This is definitely a chance to get some questions out there and to. I don't know, just to answer them. I didn't really have much else to say, honestly.
So I did draw this position on the chart just for funsies. It's not. There's no entry here because this candle didn't break over this one's open yet. But if it does, just for fun and just for study, we can watch what an engulf would look like in practice, right? So while you guys are asking questions. It's going to go up or it's not.
Oh, I see, because it's live. I'm like, what do you mean? Oh, yeah.
Yeah, so automatic 2-to-1 risk-reward ratio. So in this case, you'd be risking 7 cents unless it goes to a lower low in exchange for 14-cent profit potential for a push to new high. Now, I'm not saying that's going to happen, and it didn't break over here yet, so there's no engulf. So, but let's just study it. All right, so that candle closed, which adjusts our engulf criteria. So put that at 1 cent. There we go. Charting levels of support resistance from low time frames to high, please. I will go ahead and correct what you wrote and say from high time frames to low, because longer is stronger and the higher time frames provide more stable data. So we typically want to look from the higher time frames down to the lower ones.
Yeah, we confirm using the lower. We confirm the high using the low, basically.
Yep. So if we look at this guy, okay, and look at how small that trade was, by the way, in comparison. This is the daily chart. We're looking at a 21-cent range on a $48 stock. That's why I'm saying just for fun. It's not for, like, nobody's going to make $1 million off this trade. So if
Uber gets bought up by Amazon.
Yeah, no kidding. No, trying to do a live stream, Elon. God. So just a couple little tricks, right? First off, just back out, zoom out, kind of see what makes sense. Where does the price tend to form a line? Where's the negative space tend to just kind of cross, right? So if we're looking here, right, I can tell that there's a little bit of participation here, right? This gets hit, this gets hit. It kind of pokes over a little bit, but it's relatively, there's some participation here. This tests it from above. You can't really see that very well. There's a little bit of contention here, and then you get 2 more tests here from below. Comes pretty close there, and then it shoots up, and you got a gap, right? And then you've got this support line, which just kind of holds the higher lows, right? So there's 2 pretty easy levels right there, and you're just kind of looking to see where the price turns around. And they don't have to be perfect. They don't have to be super accurate because these levels are ranges. And all I'm doing is just looking and seeing like where the price turned around, where it kind of held, where it got rejected, and I'm just putting a line there. It's just to help you understand the price action. The market does not know, and it does not care if you have lines drawn on your chart. So don't think that's going to affect the price action. It's just to help you be confident in your entries and setups and risks. So if we're looking more locally, right, we can see we've got kind of a level here, we've got kind of a level here, we've got kind of a level down here, right? Maybe a little bit of a support there. And up here, right, we got kind of this chop up here, which we're heading into right now, okay? And then, of course, we have the high. So one of the wider areas that we're trading is this zone right here. Okay, so we always want to shoot for those wider areas of support and resistance. And then if I kick it down to maybe the 2-hour chart, then I can start looking, and I'm going to change the line width and stuff. So if I change this and then I apply the default, this will tell me or I don't want to do 2 hour. I'll go down to 1 hour. That'd be more fun. This will kind of tell me that I'm charting these levels on a different time frame. So I've got one here. I've got one here just because where the price turned around. So this is really the optimal zone. In zone, put strong pulses, right? So now this kind of around here, right? In that little mess right there. Again, I'm lean and he's afraid. That guy. Okay. So if I probably should change those. I changed them all, but let's go look at where the price is. So you can see we're kind of in a zone where we're likely to see rejection. We've got a local level, a lower time level right here, 47.50, and we've got a higher time frame level, a bigger reversal point, about 20 cents above that. So this is an area where bears are probably going to seek entry push the price to the downside. So I'm looking down here at the 5-minute chart again. That's what we're starting to see. We're starting to see that push off that level to the downside. Now, whether they have the strength to put it over the majority of this channel from there to there, that's to be seen, right? Is my internet messing up?
Is that just me? I didn't want to say anything in case.
Did my voice cut out?
Oh yeah, you were sounding all. Okay,
Oh.
It wasn't just me. Okay.
Oh, you got to tell me,
I thought that your AI to human modulator wasn't working, and
yeah,
the real
it's broken.
Out. No, I figured because I'm listening to you via StreamYard. I figured Discord was still working.
Gotcha. Yeah, my internet's jacked up right now. So, but yeah, so the bears are going to look to reject up here, right? Because this, if we draw a box, okay, hopefully you guys can hear me now.
Yeah.
If we draw a box right here between that lower time frame and the higher time frame rejection levels, that's where price is likely to turn around. Okay, so if we're a bear and we're seeking engulfs, that's why I said, "Ooh, my engulf right there." When I saw this chart, this is the entry opportunity for bears. It's going to be right there with a risk right there, and then a profit potential down to here. So the potential for this is obviously much bigger. It's a slower trade, obviously. And obviously you'd want to scale out along the way because you've got these little resistance level or support levels here and things like that getting in the way. So that would probably be first take profit, second take profit down here, and then beyond, right? But let's ignore all that. One of two things is going to happen. It's going to hit this level and go higher, or it's going to hit this level and go lower. That is an inevitable fact of supply and demand. It is going to go up or it's going to go down. If you're trading options, it going sideways does affect you, which is why we don't want to trade 0 days on slow moving stocks. So in this case, if I'm a bear, okay, I'm going to look for pushes to the downside. So in my personal preference is engulfing candles. So I'm going to look for another entry right here, potentially, on a break of the low of this candle with, again, defined risk and a greater than 1-to-1 risk reward. So I'll just bump this up to 2 just for fun. That's the kind of thing I'm going to be looking for because I've looked at the higher time frames. I've identified levels of potential resistance. Even though we're seeing strength going into it, there's always the opportunity for it to turn around. I then looked at a lower time frame and identified a more local resistance level and the gap between those. And I've identified there's more potential for it to fall, or more range for it to fall, I should say. And then I've looked for the actual entry and confirmation and stuff on the lower time frame, where these little tiny risks don't matter. Because if we think about this, if we're looking on the daily time frame for a push all the way down to here, right, from this entry here down to this support level, and I go back to the 5-minute, you see how big that box is in comparison to this little tiny risk right here? I don't care about that little tiny risk. I'll take those because oh yeah, we did get our confirmation here. So let's do stop needs to go up a cent, entry goes down a cent, and then of course we have to adjust our profit for the 2 to 1. Okay. So if that's my thesis, my idea, right, my approach to this trade is that I want it to go to the downside. I see a confirmation of the downside off of an area of resistance. Why not take that trade? Because I can justify it. It may still break up through that level, and that's okay. I don't really care if it does because I have a super tight, small risk, and I don't care. So that's my approach anyway.
I have a question for you.
Yeah.
All right, so let's look at CRKN. This is a new alert that was just posted maybe 7 minutes ago. I'm just curious, how would you, if you were a person, if you were thinking about taking this alert, well, how would you break it down, and how would you determine whether or not you wanted to or didn't want to take said alert?
First thing I do is look for the catalyst this company has, because these giant spikes right here tell me this is probably going to be a low float stock and it can't hold profits. So for this trade, 3 million, 3 million float. That's a micro float. So in this case, if we're looking to build down a position, I got a known level here at $1, right? I know for a fact if it drops below $1, the likelihood of a reverse split is pretty plausible. And they're going to want to try to keep it above $1 to avoid that if they're investing long term. So that right there gives me a good support level, that $1 range, but it's still a little far away from there. It's 129, so we can't really use that alone to justify an entry. But what we can do is look at the lower time frames and kind of see the overall sense of things. So if we look here, huge, massive sell-off, right? I would look at the company and kind of identify some financial factors. How much cash on hand do they have? How good are they as a business? How efficient are they? What kind of catalyst do they have coming up? And we can also look for some resolution in this zone. Now, that's not obviously guaranteed to happen, but that's where it's going to pull the price in that direction. Okay. But now if I look at this price action, this angle here, and this angle here, and compare it to this flat angle, we can see that we're finding support stepping in, and we're starting to break over local highs. So that's probably why this was put out, because these low float poppers do have a lot of potential to shoot triple digits pretty easily with just a little bit of volume. So I would look for catalysts, and I know I've got a nice tight support level right here, potentially right here if we had to, but we're at $1.28 now, so we really just got to push, right? That's all it really has to do, and in order for that to happen, we got to have volume. So two things are going to bring the volume in. It's going to be either price action. You're either going to get a 4% gap within some certain rate, and it's going to pop up on people's momentum scanners because it's a low float, or it's going to be a lot of volume driven by a catalyst. So those two things are kind of what we'd look for. This is not something that we want to hold on to and just kind of hope it slowly trickles up, because that typically doesn't happen with these. But either way, I would play it nice and tight. So in this case, if we're looking for an engulf right here, I don't know what the alert levels are, but I know I've got an engulf, and I know I've got a support level down here. That's 7.2% risk. So that tells me I've got to adjust this maybe for a 2.1 to 2 risk reward. So let's see what that would have resulted in. So price target of $1.43. So now I'm going to kick over. Yeah, just for that's not an unofficial alert. I'm just
yeah. I'm just trying to find where I just find that. There it is. Yeah, they have. You said price target. Yeah, they have target.
$1.50.
Yeah.
So Lee and I are the same. Now I put my stop loss down here to $1.16, and he had his at 117.
Yeah,
so
117.
Yeah. So that's how systematic we can be. I had no idea that this was an alert. So. But that's pretty cool, right? We're just using roughly the same process. I'm knowing him, and this is how I like to trade too. He saw this massive sell-off. They're probably okay as a company, I would imagine. And he's probably looking for some sort of push off the support level. So again, identified an area of value, identified a setup. In this case, we're forming a higher high, higher low. We're pushing over that high again for continuation. It's a low float stock, so it could go quick. But that's the setup, right? Within the area trend setup, and then confirmation here was a break above these red candles. So that's just that same hierarchy. It doesn't matter what your approach is; it all fits that.
Cool. And then Matster there has a question.
What's up?
Options. Are you able to see that in the chat?
Yeah. So he says, if you're trading options in the case of Uber and you have your risk reward defined in the equity chart, how do you tie the option contract to that stop and take profit? Do you just monitor the equity chart or switch to the option contract? There's two ways you can do that. So the first, obviously, is to use the price action, and whatever happens with the contract happens. That will destroy you on short expirations, though, so I don't recommend that. But what?
Nope. Did anyone else lose Pookie? All Okay, this wasn't just me. Pookie, we lost you. He'll be back, hopefully. But, yeah, right. He's just going off. Probably want to make hot pockets. Get some more Red Bull. There's Pookie. You can hear us. Pookie. Oh, he left the StreamYard. Yeah, right. This is our IT guy too. Well, Pookie will be back. That's a good question, Master. I'm curious to see what he says about that. I know when I trade Uber, I just honestly, it's just based off of the chart. I trade like an equity. If it was like a penny stock, or I trade as if like the risk to reward, all profits are based off of bigger moves than obviously the underlying stock, since options move a lot faster. But I personally just I would trade like I would a day trade with a penny stock when I trade the options. But I know that Pookie definitely has a much more defined strategy. Where is he? I think. Are you done? Are you out? Are you done, Pookie? Someone get a milk carton. That's what Cac says. See, I won't be able to hear him because I have to turn the volume up. Oh, he's coming back. He's back in the StreamYard.
Duck, can you hear me?
There you are. You're alive.
Can you hear me in Discord?
I don't know. Let me see.
Let's find out together.
Okay. Yes.
Oh,
yes.
okay. Whew. All right. I forgot where I was. So I remember.
That was our commercial break.
Thank you. I hope you guys all got some hot pockets. Yeah, I can hear you guys perfectly fine. That's weird.
It's not you, it's me.
Yeah, so back to Master's question. So there's two ways you can do it, right? Obviously, you can use the price action, and if it hits the stop loss, you can stop out. That is going to destroy you on short expirations. I don't know if you guys already heard that part. But if you're trading longer expirations, it's okay. But there's something else you can do, which I know you know how to do. But if I were to look at the options contracts, I'll just use a 1 day just for fun here. So if I look at 47 put, right, just for fun, on Webull, you can pull up the chart for that contract, and you can just measure the time. So in this case, it was on the 5-minute chart, the 225 candle. Sorry, it would have been the 230 candle for an entry. So you would just look back here at 230 and kind of see where the price was at that time on the same chart, if it lets me. Well, we'd have to go to this one. So this would be your stop loss on that contract at that point, or just below that. So in this case, your low was 18 cents. So if that contract at 17 cents, that would be your stop out. Now, obviously, again, shorter expirations, IV, things like that, that's going to decay those. So you might want to add a little bit of padding, but I wouldn't go too far down just because that's, it can hurt you a lot more. I just use the price action for the most part, because remember, if the price is going to go, it's going to go. If it doesn't move, we probably didn't get that good of an entry. So we just kind of want it to go in that direction and not pull back. So hopefully that made sense.
Yeah. Anybody else have any questions for now? I know we kind of went over all the stuff that we were planning on going over. I say plan very loosely with this one, because I know with you I can just ask you anything. I don't really have to give you a whole rundown ahead of time. we had a conversation with ChatGPT, all of us in the premium lounge last night during PBU Live. We were trying to figure out how who invented the candlesticks by name, and ChatGPT just would not tell us.
Oh, well, okay. So there's a little controversy there, right? Because the Greeks tend to take credit for it, but so do the Japanese. So it's a little bit of a history struggle.
Oh, I Interesting. I thought there was more. They're going to say something else.
No. Used up all your credits.
Yeah. Need to get the premium version.
Yep. Please subscribe.
Speaking of which, for those of you who actually everyone here is in premium, which is perfect. This week, if you check out, I'm going to just drop that link, the premium classes. If you check that out, you'll get access to, right now we have week 1 and 2 up. Week 2 is all these candle pattern classes. Week 3, coming up next week, we have a patterns class going over all those different patterns, like the triple bottom, double bottom, head and shoulders, inverse head and shoulders, cup and handle. All that stuff we went over earlier today. We also have a trend lines and zones class going over just that, and just how to draw out trend lines, how to draw out your supply and demand zones, as well as different ways to do it, because I know there's a bunch of different ways that traders use. We go over divergence, RSI divergence, and also other type of indicators you can use for divergence, the difference between weak divergence, exaggerated, and your regular strong divergence. And the last class is under Fibonacci, which Pookie and I next Thursday, 2 p.m. Eastern, are going to be talking about. I'll be quizzing Pookie and just going over different ways to use Fibonacci retracements and Fibonacci extensions in the class. Material, we actually go over Fibonacci time zones as well as pivot points and TTM squeeze in that class. So definitely be sure to check out those premium classes if you haven't already. Once you graduate, you get access to our alumni classes. We have alumni live section and alumni classes. Alumni lives is available to our PBU OGs and alumni, but the alumni classes, which has a bunch of our PBA classes, is available to our new alumni only. So make sure to check out those premium classes and get that graduation cap going. Do you want to check out Coinbase?
Yeah, that's what I'm doing right now. So he's saying that on the weekly time frame, he's using a Fibonacci retracement. So anytime you have 5 or more candles with higher lows from the candles before, that's a technical impulse. So as soon as you see that, you can start running a Fibonacci, and we'll get into that all next week. But ideally, we want it to come back and land within this 50 to 61.8% range. And that just means that there's a good mix of people who have taken profits and people who are jumping in. So the higher time frame setup here is this approach. And if you look back also, this is a nice little support and resistance level. So this 61.8% level at the 7250-ish range is a very good level for strong bounces. So, and here's a closer look at the impulse retracement and all that good stuff. So now it has broken out of the box, which is good. And we did, not to toot my own horn or anything, but we got a nice, beautiful little engulf right here. Minimal risk, huge reward. That's pretty good. So if you're into that, congrats. But obviously we didn't catch that on this stream because we weren't looking. But ideally this stuff would be on a watch list, and you'd be just kind of waiting for something like that, because that's how we make a ton of money with minimal effort. So 55 EMA on the daily and 200 EMA on the hourly. So let's go ahead and look at those. I'll just go ahead and put those on. So I'll just do 55 here. And the moving averages, again, they also don't matter, right? You're just looking for a burst away from a zone of value, and that's exactly what the BAC is for. So in this case, I'm not seeing it. I see the... Oh, okay. So I think I see what you're asking. But for those who don't know, when you see a candle like this, where it cuts right through that the moving average cuts right through the middle of it, that's a bisecting candle, and that's kind of equal on both sides. So it's not as strong as a, if you would see this candle up here above the moving average, that would be much, much stronger. In this case, it's just a bisecting candle, which means that price is indecisive. It's going to come back to this moving average most of the time. Which is what we're seeing. So in this case, we would want to look at a lower time frame and treat this as a Fibonacci. We can go right to the top there. So in this case, the price is back right where it needs to be for that retracement. And I'm just going to get rid of these moving averages real quick. But you said you wanted to look at the 200 also, so we'll look at that in a moment. But as far as the impulse correction and then potential continuation here, we can look for an engulf right over one of these candles, and we'd have nice tight defined risk there, right? That's all we need to care about. So in this case, if we got a engulfing entry, it would need to be at least 1 cent above that candle, and we'd have our stop loss at 1 cent below the low of the 2 participating candles, and then a 2-to-1 minimum risk reward, ideally 3 or higher. But we don't have anything in the way here, so we could probably just push that right up to here. So yeah, that's what I would be looking for personally. And every time you see a red candle here, this is an impulse as well, because 1, 2, 3, 4, 5 plus 1. Candles with lower highs, that's a bearish impulse. So when we see this, there's a good chance there might be like a 3-line strike to the upside, which is where one candle engulfs 3 or more of the previous ones. So we just use the tops of these candle bodies here, the opening of the red candles, as our entry threshold. And you got that nice tight stop loss right there. Back here, that would have been a riskier entry because that wick is really far. So you probably wouldn't have wanted to go for that one. But this one's nice and tight. Price is kind of compressing into this fib retracement zone. So we can just look for a break over one of them, because you can see the last 6 candles haven't had a higher high. So none of these have broken over the previous candles open.
And for those of you who, once again, are a little confused as all those different
Sorry.
terms, no, which is fine. It is okay to be confused. This is a live, our live class, but we also do have. I know that we had a bunch of awesome graduates, but I love to see more people get into the premium classes and become graduates, because we go over all the stuff, Fibonacci retracements, extensions. We go over the 3-line strike, all that stuff in the class. So if you have any questions on that, definitely be sure to check out that class first. Before we end the stream, as far as recording goes, we can stay in the Discord. I don't want to make the stream too long for those watching after the fact. I just want to mention that we have a new giveaway. I'm going to throw it up on the YouTube screen. If you go to the mini game, not new giveaway, new mini game, we'll be doing giveaways for the top 3 winners. But go to the mini games section of the Discord. You'll see a made up, completely make believe candle pattern. I know we've all been there, getting in on the top and watching that big, huge, fat red candle come after. And I would love to see your mock, make up names. The funniest person who could name this candle pattern. It's a make believe candle pattern. We'll get some prizes. So I just wanted to put that out there. I am going to end the YouTube stream. We can stick around here in the Discord. For those of you who are watching on YouTube, make sure to check out the live next if you are available. We can be doing this every Thursday, 2 p.m. Eastern. We have another live stream coming up Thursday today, 5 p.m. Eastern, for the alumni and the PBU OGs. That's going to be in the alumni voice chat with myself and BTCJ, going over candle patterns as well, and just different charting techniques. I think Jay said he wanted to talk about using the monthly chart, which he says is a very underutilized chart. And so I'm really looking forward to that class and just picking his brain on that and seeing what Jay does in the market and sees in the market, and how he uses these different patterns. But for those of you who are watching on YouTube, I hope to see you there. Until then, we hope that you all make some bread.